All right, so this session will be recorded, so just bear that in mind as you are speaking. If you're not addressing the group, please go ahead and mute your mics so that your background information and conversations will not be recorded, because this is the video that I will download later and put on YouTube for this session. So you don't want that posted out there. Okay, so what I was saying was with the CDFM study group, that's why I use the word study group. The assumption is that you have your own study guide, no different than you go to college, you go to a school, you have your book, you've reviewed the information. And so when you come here, I'm just trying to clarify some things that you may not understand or give you some hints in how to remember some of the concepts. Because on the actual exam, you're not going to be able to carry any study material, no pencils, no pen, or in most cases, actually, they take your cell phone. If you go in person, they usually take your cell phone from you. So you can't use anything but this up here. And so when it comes to like the calculation portions, I try to give you hints to remember the formulas, because the formulas will not be given to you. The ground rule is make sure if you see an acronym in the study guide that you understand what it is, what it means. For example, CG in the CDFM is not commanding general, which is the most popular things that people say. It is the comptroller general. So that is the individual in charge of the Government Accountability Office, GAO. So I'm just doing some recaps. The key to this is repetition, repetition, repetition of the material, making sure you understand the processes, the key individuals involved, the documents. And if I jumble that, if I'm going to figure out eventually how to use this board behind me where you can actually see, but if I jumble all of those concepts and processes, can you put it back where it's supposed to be? What falls under Congress versus what falls under the president versus what falls under the court, what level. So that's what you're trying to do when you're preparing to take the CDFM exams. CDFM exams does not mean that everything in the study guide will be replicated on an exam. It also doesn't mean that everything on the exam is in this particular study guide. But 95% of what you need to pass the exam is right here in module 1, 2, and 3 study guide that you buy from the ASMC. So I do have individuals that often come back and say, hey, I didn't see this. This question was asked, but I didn't see it in the study guide. I'm going to question ASMC. They're going to tell you, look at the different references, the laws, the policies they talk about, the regulation. The expectation is for you to review those things. Did I review them? No, I made sure that I knew what was in the book from back to front to back in all 3 modules first. And then I focus on module 1, then module 3, then module 2. And by the time I got to module 2, I realized, oh, some of this information repeated itself in all 3 exams. So that's my little spiel before we begin with the accounting piece of it. And at any time while I'm discussing, if you have particular questions, feel free to let me know at that point, and we can go ahead and discuss it. All right, let's see. For CDFM Module 3, Competency 3, Accounting section, let's put the glasses on, accounts for 25.3% of the exam. So the CDFM exam, if you haven't taken any of it, it doesn't tell you which section the questions are coming from. So it's not going to say, okay, this is the fiscal law section, this is the finance, this is the accounting. It's just going to be, I think it's 80 questions, multiple choice, random questions. And based on the information in the question, then you will know whether it's an auditing, accounting, or finance related or fiscal law. So this portion, so let's see, fiscal law accounts for 31%. So the majority of the questions, and this section accounts for 25.3. So what does the percentages mean on the exam? That tells you how you need to focus your study. It doesn't say that you're going to get 5 questions from this block or 10 questions from this block. It just gives you the percentage, the weighted amount, to help you to figure out how you're going to study. All right, so let's begin. So I know this section is probably not going to take us the full hour and a half. So that's why I wanted to get all of that out in the beginning. All right, so accounting. Let's start with page 3.3.5 of your book. There are 3 types of accounting. You have budgetary accounting, proprietary accounting / financial accounting. So if it's not written there, go ahead and write financial accounting next to the word proprietary accounting. And the 3rd type is managerial cost accounting. So we're going to look at all 3 of those. There are going to be some formulas and things you're going to have to calculate on the exam, and the formulas will not be given to you. So we're going to kind of look at that. So 3 accounting systems: budgetary, proprietary / financial, and managerial cost accounting. All right, who can tell me, aka Miss Tina, I know you, on page 3.3.6, where do we find no money shall be drawn from the treasury? Where in the Constitution is that discussed?
That is Article 1.
You're there? Come on.
Oh,
come
yeah,
on.
I'm here. I'm just trying to think real quick. Article 1, and I'm going to guess on this, Section 7.
Close. Article 1, Section 9, Clause
okay.
7.
Oh, okay.
The 7 is the clause. So, and Article 1 says that we're talking to which branch of government, and anybody can answer at any point. I just like to throw questions out there so it doesn't feel like I'm talking to myself like I normally do. So no money shall be drawn from the treasury, saying the reason the government shuts down is because of the Constitution. In Article 1, it says you cannot take any money out of the treasury unless you have an appropriation law in place or a temporary appropriation law. So we've covered this, and it says it there at the bottom of the slide, Article 1, Section 9. We covered this in Module 1. Article 1 tells me that they're talking to Congress, it's addressing Congress, so Congress is covered under Article 1. The executive branch is covered under Article 2, and the judicial branch is covered under Article 3. So whenever I see Article 1, I already know they're addressing Congress in the Constitution. So if you don't remember none of the articles, at least know Article 1, Section 9. The reason the government shuts down. On page 337, it talks about the 3 different federal financial statements. You have the balance sheet, the statement of net cost, and the statement of change in net position. So it's just explaining what changed from previous to the current net position. So they have examples starting on page 338 to 3310. I'm not going to go through each one of those. I want to move over to page 3311. So we're going to kind of look at some of the laws that were mentioned also in Module 1. The 1921 Budget and Accounting Act established the GAO. We also learned that they established the Office of Management and Budgets. So that we're talking acronym, right? As I mentioned, if you see an acronym, you need to know what it means. So what does GAO stand for?
Government Accounting Office.
Government Accountability Office.
There we go.
Okay.
All right, you were close. You were close. You're in the neighborhood. Government Accountability Office. And you see, I ask that question every time, and the mind kind of tricks you to go somewhere else with it. So repeat it every time. As you're moving along your studies, whatever you know of that topic, repeat it again to yourself. So Government Accountability Office, who do they work for and what do they do? Because it says, let's see, 1921 Budget and Accounting Act established the GAO to audit the executive branch. So let's talk about that statement right there. Who does GAO work for?
Congress.
So GAO works directly for Congress. Okay, well, what does GAO do? So GAO is an independent auditing agency that works directly for Congress. Okay, let me explain. So Congress says you can do, you cannot do these things with these appropriations, these funds. Well, if Congress doesn't check us and make sure we're following those rules, chances are we're going to do what we want with the appropriations. Here comes the GAO. So the GAO is the external organization that works for Congress to make sure that we are following the do's and the don'ts listed by Congress. Then what does it mean when it say the GAO audits the executive branch? Why only the executive branch? Just think about it. Why is the GAO auditing the executive branch? Okay, phone line, nobody in the phone line? Teams, come on, think about it. Where does the budget come from? When they start the budget estimate submission, who submits the budget?
The president does.
The president, right? And
yes.
Thank you, phone line, I heard you. Thank you. So the president, and what branch of government is the president in?
The executive branch.
The executive branch. So the budget estimate comes from the executive branch and is submitted for everybody else to Congress. So once Congress approves the budget, it makes sense that GAO is auditing the executive branch, right? Can everybody see that now?
Yes.
Can you visualize, right? So if you see that again, you understand the GAO is auditing the executive branch because the budget request and approval is to the president, it's to the executive branch, the press bud, right? When you do all your justifications and your budget estimate submission is submit. The 1921 Budget and Accounting Act also established another organization now called OMB. That's another acronym. What does OMB stand for? And who do they work for?
That's the executive branches.
What does OMB stand for? Let's do that first.
The Office of Management and Budget.
Okay, the Office of Management and Budget. And the reason I'm telling you, you need to know what the acronym stands for, because sometimes on the exam, you're going to see acronyms and they might say, well, what does it mean? And we're tendency to go towards what we recognize. So if you consistently Office of Management and Budget, then the next response is, who does Office of Management and Budget work for? And I think Ms. Tina said the executive branch. They're the resource management office for the executive branch. So that's a lot going on in the 1921 Budget and Accounting Act. So that's two major things. And the third thing that happens with the 1921 is it requires the president to submit the budget to Congress annually. When does the president, what is the limitation? When is the president required to submit the budget to Congress? No later than?
First Monday in February.
All right, the phone line got it. No later than the first Monday in February. It doesn't say it cannot be submitted earlier. And he doesn't even address if it's submitted late, but by law, it's no later than the first Monday in February. All of that, those three key things, and the reason I'm pointing those out is because these things come up consistently in the study guide. So at least know that law. I'm not going to tell you to memorize all the laws like we did in middle school and high school in 1921 budget. Okay, at least know that one. Also know the Federal Managers Financial Integrity Act of 1982 required agencies to have auditable financial statements, right? Yes, let's see. Yep, internal control program, that's what that one addressed, FMFIA. I see, so internal control is mentioned in the 1982 Federal Financials Act, and then the 1990 Chief Financial Officers Act is the one for the Army. That's why we got GFIBs and all these other systems. We must have an auditable financial statement report. So I'm gonna say for audit.
But
Audit
Ms. Helen,
statement.
I'm sorry, can I stop you for a second? Are we
Yes,
still on
ma'am.
page 3.3.11?
Yes, ma'am.
Okay, I just wanted to make sure. Okay.
There's a lot on there. So I
Okay.
went over the 1921 Budget and Accounting Act
I got that one. Okay.
and the 1982, which is like the third from the bottom, Federal Managers Financial Integrity Act and the 1990 CFO Act. Those come up consistently throughout all three modules. So you need to at least understand those three.
Okay, thank you.
Okay. We can move over to page 3313 as we talk about federal financial management, and they mention again those organizations. So that's why I said a lot of this stuff is repetitive when you start breaking down the information. So we talked about Office of Management and Budget. They work directly for the executive branch, resource management. We talked about GAO. They use the term watchdog for Congress. That's an external auditing agency that works directly for Congress. So the GAO is primarily concerned with how the executive agencies implement what Congress told them in the appropriation law, in the authorization law. Department of Treasury, because no money can be drawn from the Treasury. So the Treasury is a key organization in this process because the money stops if the appropriation law is not enacted by 1 October. And if your CR is also not enacted as that temporary appropriation. So Treasury is important. Federal accounting standards tell us how we got to maintain documentation by the Comptroller General. That's your CG. In the CDFM, CG represents Comptroller General, and that is the title of the individual in charge of the GAO that we talked about, that organization that works for Congress. So accounting standards. Counting boards, I mentioned on 14. I'm not going to go into those. We're going to start on the bottom of page 15. Again, OMB. Often when we get guidance from OMB, it's published in an OMB circular. When we get guidance from the DOD in this budget realm, it's a DODI or DOD instruction, DOD. So they mention again where you get these guidance. OMB gives you OMB Circular A136. That's the accounting standards. GAO provides the generally accepted government auditing standards, and then the Department of the Treasury again. All right, so now, and even though for those that are new, even though I'm skipping pages, when you are doing your review, your initial process is you have to go through everything on each page. Just read it like you're reading a novel. You're trying to identify who done it and why are they doing it? What are they using to do it? So those are the kind of things that you're trying to figure out. And you make notes as you go through the material the first time. Do not, and I trust me, I love pretty colors, but do not just highlight things in your book. Because most individuals, before you know it, you have a bunch of different colors of highlights and you don't know what it means. I find that most people are able to remember things when you write down what's important on that page. Moving on to page 3322. At the DOD level, let me grab my pen, hold on. You have the DOD instruction. This one is a DOD 7000.14R. Make sure you know it's 0.14R, because I know I've seen it in other exams, and they'll say, okay, which is the DOD's policy on financial management? DOD 7000.12R, DOD 7000.13R, 0.14, or something like that. I think the only one we address, or maybe two, second one we address in this study guide is 7000.14R, financial management regulation, because we're going to go through a lot of the volumes that you see listed there, the chapters, as it relates to the financial management policy. Because again, this is a DOD level exam. Make sure you review the different types of government funds starting on page 22, 23, so that whenever you have a list of things, make sure you know what falls in that list. So if they say which one is not a type of government fund, then you'll be able to pick out the one that does not belong in that list. Does everyone understand that? Does anyone have any question on anything I've discussed up to this point? All right, I don't hear any questions. Let's move on to page 3324. So of the types of funds, we've talked about this in module 1 a few weeks ago. You have different types, as mentioned: appropriated. We talk about where we get from Congress, reimbursable funds, revolving funds. The revolving fund is the one associated with the X funds. The working capital fund that we talked about in the fiscal law piece of it is, remember that it works like a profit business, but in the government, the working capital fund or revolving fund, they must break even. The goal is to break even. So they cannot consistently, like on the commercial side, earn a profit. So you got examples of the trust funds and the NAF funds. And I think NAF is covered, I don't know if it's in this one, on module 2, will be covered later. Non-appropriated funds that are not appropriated by Congress. Categories of appropriations on page 25 should be just a refresher for most of you. Some appropriations are annual, such as MILPERS and O&M. They're expense type, they're annual. Multi-year, RDT&E, procurement, shipbuilding, conversion, Navy, and military construction. And let's see, RDT&E is a 2-year, procurement 3-year, shipbuilding, conversion, Navy is a 5-year, military construction is a 5-year appropriation for new obligations. Let me pause. What can you do with an appropriation once it gets in the expired state? So all I'm doing is recapping knowledge that I know about the categories of appropriation. What can you do with an appropriation once it enters the 5-year expired state? You can make adjustments, upward and downward adjustments. So once it crosses over, if I have an RDT&E fund, it's good for new contracts for 2 years. After that 2 years, it stays in the expired state for an additional 5-year fiscal year. And the only thing I can do in those 5 fiscal years is make adjustments to contracting documents that were already in the system, and I'm either making upward or downward adjustments. On page 26 is another chart that shows you MILPERS, O&M, or 1-year appropriation, RDT&E 2-year, procurement 3-year, shipbuilding, conversion, Navy 5, and military construction 5. So remember the same concept that I went over, I think, with the fiscal law. You may not see it direct like this. They may tell you what type of appropriation you have. Let's say you have RDT&E, and I'm gonna write myself an example. I just say today is 5 November 2010. All right, so I'm gonna do it slow so you can work it out and y'all will give me the answer. If today, all right, so if today is, do I have a question?
No, I'm sorry. I was taking notes in my book. I'm writing this down separate. Go ahead. I'm sorry.
Okay, so if today is 5 November 2010, you just received RDT&E funding. When will those funds be closed? RDT&E funding, it's 5 November 2010. What fiscal year would these appropriations be closed? So I'm going to pause for a few as I'm just writing this down myself. All right. Who's got the answer? Or who would like to take a shot at it? RDT&E funding. It is 5 November 2010. When will these funds be closed? Would anyone like an opportunity or you want me to just walk through it?
Closed in 2018.
So I have phone line, you say FY 19?
18.
18, okay. I have an FY 18, it'll be closed. Anything different? All right, FY 18 is correct. If today is 5 November 2010, what fiscal year are we in?
We are in fiscal year 2010.
11.
Nope, your
no.
fiscal year, not annual
11.
year.
I'm sorry, 11. 11, yes.
Fiscal year 11. And we say you have RDT&E funding. So RDT&E is in phase 1, or they're good for how many years?
2
Based
years.
on the chart, it says 2 years, right? So you have FY 11, FY 12. That's phase 1. Then every appropriation stays in the expired state for 5 years. So that's FY 13, 14, 15, 16, 17. They're expired from FY 13 to FY 17, hence it is closed in FY 18. Does anyone have any questions? So that is how you will probably, like I said, do not see, it's been like 2010 since I took my CDFM exam, but I promise you, there's no other way they can ask the question other than doing exactly what I did. So you're not going to see it in direct format, such as what's on the page, but based on the example I gave you, those are the types of questions that you will have to answer. Or they might say, when is it in the expired state? So once you write all that out, now you know it's in the expired state from FY 13 to FY 17. So you'll have some scrap paper on your exam in most cases. Write down do the entire process, even if it just asks you expired state, do it all the way to the closed state, because you need to be able to be sure when you look over on your answer sheet that it matches. Because I promise you, as a previous test writer for the finance school, is all the responses is going to be the ones that are here. And if the question asks you for expired state, you don't want to give them the answer for closed or the answer for open. You want to make sure you're answering the question asked. Also on page 26, you see the flow of resources. Commitment, administrative reservation, we're setting the money aside. I have $10 for lunch. I'm going to set that $10 in my pocket. That's for lunch today. Obligation is legally binding the government to make that purchase. Once I go out and I order my food and I eat my food, I'm obligated to pay for that food. So that $20 is now obligated. And my obligating document is that, what is that? Not the receipt, the check, right? I'm trying to give an example. Outlay is the term that's used in the study guide for disbursement. So outlay, as we learned earlier in 3.1, is when the funds are removed from the treasury to pay a bill, it is called outlay. So make sure you're familiar with that term for those that are new to our sessions. Page 327, I did have some input. Make sure you know the obligating documents and the difference between a project order and an Economy Act order. So most times when we do the military interdepartmental purchase, the MIPR can either be project order or an Economy Act. And if you think of the word project, to me, that says that's going to take a while, right? It's a project. So let me see if they do the chart here, because I think module 1 also has some information on project, which is more than this. So project order, typically it doesn't matter if it crosses fiscal year, you do not deobligate the funds. Economy Act, you deobligate the funds. So I'm trying to think of the page. It's going to come to me. If not, I'll give it to you guys next week. Because what you want to do, that's why I told you to read the whole study guide, because some of the information is in more detail in another section than it is in the module that you're studying. So I'm going to make myself a note here. Project order. And then I'm going to find you the other page where it has side-by-side comparison for the project order and Economy Act order. Project and Economy Act. Any question? Act orders. All right, so what I'll do on this Teams, I'll put it in the comment section. Once we're done, I'll find the page and put it there where you can see the side-by-side comparison. The biggest one is Economy Act orders. You deobligate the funds at the end of the fiscal year versus a project order. Outlay is mentioned in details on page 28, so I'm not going to go through it. All right, the meat and potatoes of the accounting section starts on the bottom of page 28. The chart of accounts. If we're talking accounting, so it's not like accounting in college. We don't go that level of detail, but you at least need to start with the chart of accounts. If you notice the chart of accounts at the bottom of page 28, it starts with account codes from 1,000 to 8,000, the title, and the normal accounting balance for that particular event or title. You have 1,000 equals your assets, 2,000 for liabilities, net position is 3,000, 4,000 is budgetary, 5,000 revenues and financing sources, 6,000 for expenses, 7,000 gains and losses, and 8,000 for memorandum. You can learn the normal balances. I don't really focus that much on those because you got to understand the account on the title. Why? Because on page 29, if you see numbers all starting with the number 4, for example, in the charts at the top of page 29, 3329, you know that anything that starts with a 4 for the 4,000 numbers is a budgetary transaction. So the formula for budgetary accounting, remember we started in the beginning, 3 types of accounting. This is the first one, budgetary accounting. The resources equals status of resources. Remember, you got a balance, right? When it comes to accounting, the left side must equal your right side. However, let's say they give you a series of numbers. They all start with 2,000, 3, 4, 8,000, 1,000. Yes, ma'am? You are going to, if they say calculate the budgetary, do the budgetary accounting. What's the budgetary accounting? It is your resources. So you got to take all your 4,000 numbers, resources equal the status of where those resources are. is going to come into, is going to make a little bit more sense as we move along. So anything that starts with a 4 is budgetary. Because remember on the exam, they're not going to tell you, and they're not going to give you the formula. So you got to know that chart on page 28. So I'm going to put my pencil there so we can flip back and forth. On page 30, this is your second type of accounting. Proprietary accounting. And what was the other name that I said you might need to know? And I'm writing it in my book. Financial accounting. Proprietary and financial is the same thing. The reason I'm saying it is used interchangeably. You may see it again in a different form. So in proprietary accounting or financial accounting, you have the balance sheet and the statement of net costs. Those are the two statements. The bottom of page 30, or on page 30, the formula for the balance sheet is assets equal liability plus net position. That should be easy for you to remember the formula because 1,000 numbers on page 28. I'm going to be going back and forth to page 28. Your asset is your 1,000 numbers as listed there on page 30. Liability equals liability, 2,000. Anything that starts with a 2 is a liability. Anything that starts with a 3 is net position. So all my assets equal everything that starts with a 2 and everything that starts with a 3. When you see this information again, you're going to get a series of numbers, and they might say, calculate the balance sheet. All you got to do is everything that starts with a 1, add them up. It must be equal to everything that starts with a 2 and everything that starts with a 3. And if you get the same number on both sides, you're good to go. You just did the balance sheet. It's got to be balanced. And then on page 30, the next formula, so that's one formula. And then the second formula on that page is expenses minus exchange revenue is your net cost. That is anything that starts with a 6 minus anything that starts with a 5 is your net cost. Any question? Because I know it sounds like I'm talking a different language. Yes, Ms. Tina, go ahead.
Yeah, Ms. Helen, so the series 5 for revenues and financial sources, that is the exchange revenue?
Yes.
Okay.
So good recognizing that, because on the exam, they can use different terms, but it's meaning the same thing. So long as you know 5,000 numbers are revenue, don't matter what kind of revenue, whatever they want to call it, exchange revenue or revenues and financing sources. If it starts with a 5, it deals with revenue. And so the formula will be on you to remember. They'll give you a series of numbers as mentioned or accounts, and then you have to then put it all together and make sure the left side equals the right side. All right, so how does that look on budgetary and proprietary accounting? We'll explain it on page 31. But before I begin this, we need to walk back through the flow of funds. Once Congress appropriates the funds, two things happen. The first legal thing that happens is the Treasury issuing the Treasury warrant. Because remember, that one is tied to the Constitution. I can't get any money out the Treasury unless I have an appropriation law. So the first thing that happens is the Treasury issuing the Treasury warrant. What does it mean when the Treasury issues the Treasury warrant? Sounds fancy. What does that mean? Miss Tina, your hand's still up, so you're volunteering?
No, I'm sorry. I forgot to take it down. I'm sorry.
All right. Anyone else? Treasury issuing the Treasury warrant or appropriation warrant is basically just a notice to the agencies that the law has been enacted. We received the notice, the account's been set up, you can start spending. That's the basic idea behind it. So that's the legal thing that happened. What is the second thing that happens once Congress appropriates the funds? So that's the funding side of it. Now, the administrative side of it comes from OMB, Office of Management and Budget. So the second thing is OMB begins the apportionment process. Apportionment, how does this look? Once Congress appropriates the funds, the agencies, Department of Defense, Department of State, Homeland Security, and all those guys, they have to complete an SF-132 document. It's an apportionment document requesting their apportionment from OMB. It's kind of like saying, I know I'm supposed to get an allowance. Can I please have my allowance? So the agency, DOD, submits an SF-132 within 10 days of the appropriation being enacted, and then OMB has 30 days from then to send them their apportionment. So those are the two things that happens. Once the DOD gets their apportionment, then DOD issues what to us? How do we get our funding? What's it called when DOD sends the money down? What's the third A word? It sounds funny. Allotment. There you go. Thank you. Allotment. So Congress appropriates, OMB apportions, and DOD issues allotment. So the rest of us, if you fall under DOD, what you're getting is an allotment. And once you get the allotment, we commit, we obligate, and we outlay the funds. We spend it on whatever we need for our mission. So starting on page 31, all of that was to lead into page 31. It's going to show you what type of accounting transaction is required once you go through that process. So transaction number 1 on page 31, Congress appropriates and the president signs the Appropriation Act for, let's say, $100 million for the year, and the Treasury issues a Treasury warrant. So the Treasury issuing the Treasury warrant is one step, but then OMB goes to the apportionment. Once the apportionment process begins, it requires a budgetary transaction and a proprietary. Don't get caught up on 4119, 4450 and the numbers. Understand that the appropriation requires a budgetary and proprietary transaction. Transaction number 2, OMB begins the apportionment process. In the apportionment process, it requires a budgetary entry. That's 1. Step 2. Then DOD issues allotment. Once the DOD issues allotment, that only requires a budgetary transaction. When we commit the funds, it requires a budgetary transaction. That's transaction number 4. On page 32, transaction number 5, we obligate. Now we're in a contract, so we obligate the funds. It only requires a budgetary transaction. Transaction number 6, so we've ordered the items, we received the material, the equipment. It requires a budgetary and 3 proprietary transactions. And you can kind of read through to see, once you order the things, you haven't received them yet, then there's some of it you've received and so forth. But 1 budgetary and 3 proprietary transaction. And then the final is we pay the invoice. We receive all the items we ordered, we pay for it. It requires a budgetary and proprietary. So those are 7 transactions. So what you need to understand or know is, so it's number 1 requires a budgetary and proprietary. Everything else is budgetary until you get to number 6. Is 1 budgetary transaction and 3 proprietary transactions. And then the last one is a budgetary and proprietary. That's the level of detail that you pretty much have to understand. What are your questions on this? So it just takes time to go over it some more. So they give you multiple examples of what these items look like. General ledger starting on page 34. So if you remember basic accounting, your debits and your credit, the left side must equal the right side. Like on page 35, trial balance, 204 billion equals 204 million. All right. Balance sheet on page 36. So a balance sheet and a statement of net cost is what type of accounting? I like to do check on learning, so the balance sheet is what type of accounting? Budgetary, proprietary, or managerial? The balance sheet falls under proprietary, as budgetary accounting is statement of budgetary resources. Balance sheet and statement of net cost is proprietary or financial accounting. On page 37, fund balance with the Treasury gives you the definition. So whenever you have like miscellaneous payments, you have, and I always use the example of a soldier losing a gear, losing a helmet, and they have to go in and they have to pay for the helmet, a statement of charges. They pay for the items. Whenever they pay for the item, that money does not go back to that organization. The money goes to the Treasury, to the miscellaneous receipts account in the Treasury, or then it'll increase the fund balance with the Treasury. So the amount of the funds that the Treasury has to make expenditures. Like that's your bank balance. Page 38 talks a little bit about the property, plants, and equipment rules. Fixed assets. All right, so you have the general PP&E, or tangible assets, and they give you some criteria of what that look like. It must have an estimated life of 2 or more years, are not intended for sale, and are acquired or constructed with the intention of being available for use by that organization. So that's your general PPE. That's all I have highlighted there. So 2 years or more. Financial reporting on page 40, this is the repeat again of the different financial statements, right? Balance sheet, statement of net cost, statement of changes in net position, statement of budgetary resources. Your budgetary numbers start with a what? What are the accounting numbers for a budget? Everything that starts with a 4 is budgetary. So I'm just throwing it out there because that chart, you have to be quite familiar with that chart on page 30, 28, page 28. So they're just repeating again those statements. More examples of what they look like starting on page 42. You got a balance sheet, assets equal liability plus net position. So as you can see on the chart, you got your 2019 data, your 2018 data, your assets is at the top, equal to 2,889,950. Then when you add the liability of the 22,760 and the net position of the 129,000, and you add that together, it should equals to the total amount of your assets. So balance sheet, assets equal liability plus net position. What was the formula for the statement of net cost? Expenses. Who could tell me what's the formula for statement of net cost?
Expense minus revenue.
Expenses minus revenue, that's correct. So I'm reminding you that you have to learn the formulas. It's not going to be given to you on the exams. So that's why you got to keep repeating it. Expenses minus revenue is how you calculate the statement of net cost. And then your statement of change in net position is just showing what changed from one period to the next. So they have a consolidated statement of changes in net position on page 44. Page 45 is an example of the budgetary resources. Budgetary resources equal the status of those resources, where the money is. So that is the second accounting. The third accounting is on page 46, managerial cost accounting. On the second paragraph on page 46, they mention the SFFAS number 4 defines managerial cost accounting. So I'm going to refer you back. I know I skipped it when I started, but I need to refer you back so you know what they're talking about. In the beginning, when we started earlier on page here we go. Page 16 through 17, well, 18. Let's see. And then 14, it's referencing number 4. Says was issued. Statement of federal accounting. And let me read. What are the characters? Consolidated. Okay, so it's references page 18 through 19. Yeah, SFFAS number 4 defines managerial cost accounting, and it gives you the definition, but they gave you the definition, so you don't even have to do that. On page 46, SFFAS number 4, the definition of managerial cost accounting. And think about it, the word manager is telling you that that's what you do at the supervisory level. All right, so what do we do as a manager on page 47? You can do ratio analysis. There's 2 types, current ratio versus the quick ratio. What you need to know here is the reason you use one or the other. So the current ratio, the formula is listed on the top of 47. It says your cash plus accounts receivable, that's money that's coming into you, plus what you have in inventory divided by what you owe, current liability, all of that calculates your current ratio. So what? Current ratio is a measure. So I'm reading under the paragraph, current ratio, the second paragraph. The current ratio is a measure of your ability to meet your current obligation, your ability to pay your bills. All the money you have, all the assets you have, divided by your liabilities will then say your current ratio says you can pay your bills. And the last sentence of that says the DOD goal for current ratio is 2 to 1 or better. It means we have more money and less bills to pay. I don't know if that's the goal. It doesn't mean we're meeting the goal, right? Or we wouldn't be in a deficit. We wouldn't be having owing all this money. All right, what else we have? In consideration, current condition reference is frequently made to a company's working capital. This term may be used to indicate total current assets. When the term working capital is used to indicate total current assets, the term net working capital is used to represent excess of your current assets over liability. So make sure you know the difference between net working capital and just working capital. Net is the extra stuff you have. The next formula is the quick ratio. If you look at the formula before we switch over on page 47, cash plus accounts receivable. No inventories listed, divided by how much you owe. Quick ratio, asset test ratio. On page 48, it explains it. The quick ratio is your ability to immediately out of brain crap right then. Immediate solvency of your organization. That means you got to sell everything right away. You got to get rid of everything. You'll be able to pay your bills. So immediate solvency is made by comparing the sum of cash and your accounts receivable, commonly referred to as quick asset. So inventory takes a little bit longer for you to actually sell things off, but you compare it. So it's either the quick test ratio or it may be called the acid test ratio. That's another term that's referring to the same type of ratio. So what you need to understand in this section is the difference between the use of the current ratio versus quick ratio. And the formula, current ratio includes all the cash, all the accounts receivable, the inventory divided by liability. Quick ratio to me says you don't have enough time to sell off inventory. You want to know your solvency ratio. So cash plus accounts receivable divided by current liability. What do you owe? All right. So typically I do not go over the exercises, but for the accounting section, it's important that I do. So starting on page 49, where you have exercises 331. I'm going to go over a few of these. So if you haven't written anything in there, you have a list of account numbers, and then you have questions that you have to answer from A, B, and C. So A says, by examining only the account number, indicate whether the account represents a proprietary or budgetary account. That's easy because budgetary, all of the fours, anything starts with a 4 is budgetary. Everything else is proprietary. So for example, account number, the first one starts with a 4, so that's budgetary. Everything else below it from 2 to 10 is proprietary. Number 11 is also starts with a 4, so that's budgetary. 12 and 13 is not a 4, so it's proprietary. That's column A. That's how easy that one is. Now, Bravo says, note if the account is an asset, liability, or net position. So if you learn them in order, remember assets was that 1,000, liability 2, net position was 3. Anything starts with a 3. So based on number 2, 2590, what type of account is that? We're just going to do a few of them.
It's a liability.
Liability, why? How do you know that? You don't know what 2590 is. How do you know it's a liability?
Now that I don't know.
You know. Well, how did you know it was a liability?
Well, I mean, I went back and looked at my charts of accounts.
Okay. And because it starts with a 2.
Right. Okay. Okay. Well, I wasn't
Right.
expecting for it to be that simple. But
Right.
yeah.
So I don't want you to go and start researching 2590 and try to figure out exactly what it is. I just want, as simple as that, is knowing if it starts with a 1, it's an asset, starts with a 2 is a liability. If it starts with a 3, is net position. All right, so what about number 7, 7300? Is it an asset, liability, or net position? Who wants to take that one? Nobody want to take number 7? Go ahead, what's that?
Net position.
How is it net position? Net position start with what number?
7,000.
Net position?
I thought
Help us out there. What does net position start with?
5,000. No.
You can look back at the chart. You can look back at the chart on page 28.
Well, 7,000 is gains and losses.
Okay. So if it starts with a 7, it's gains and losses. So is it an asset, liability, or net position? No, it's not. And I pointed that out because even on an exam, just because it asks you a question, it doesn't mean that there's an answer. It might be none of the above. So I wanted to point that out to you. The question was asking you only for the ones that started with a 1, a 2, or a 3. So once I go down to number 7, for instance, it's not a 1, 2, or 3, so it's NA. Because it's not an asset, it's not a liability or a net position. Does everyone see that? So thank you all for helping me with my example. Who's that on the phone line? Miss Leah?
This is Leanne.
Leanne? Okay.
Please.
Thank you. Thank you, Miss Tina. So likewise, just because the question, just like in your everyday world, you might have multiple information provided, but that's not answering the question. You only need certain information to answer the question asked. So don't get tricked to feel like you have to put asset, liability, or net position in column B, because if it doesn't start with a 1, a 2, or 3, it is neither one of those. So it's NA or it is none of the above, unless it starts like number 13 or number 10, goes back into assets because they start with a 1. And for column C, you have to go back to the chart to know, okay, which ones are a debit, typically have a debit balance, a credit, or both. Does everyone understand the concept now with the accounts? So that's why I'm going over these. All right. The bottom of page 49, exercise 332, is walking through the process from once Congress appropriate the funds. What type of entry does it require? So remember what we went over. Once it's appropriated, it requires a budgetary and proprietary transaction and so forth. Apportionment, OMB apportionment documented SF 132 requires the budgetary. Everything in between is budgetary until you get to number 6 and 7. Because the 7 transaction. The first and the second, the 6 and the 7 are at least a budgetary and a proprietary. It doesn't matter if it's more than one proprietary transactions, as long as you understand proprietary and budgetary. Let's see. That's it. Okay, so that is the accounting section for CDFM Module 3, Competency 3. What questions do you have of me on anything we've covered? And I recommend, again, you go over the information today while it's fresh in your mind from what we discussed. Also reviewing the knowledge check questions. I usually only go over these during our review time at the end of these sessions, but kind of go through. And whenever you see an acronym, whenever you see information that you've already covered in something else, pause and recap what you remember from that. That's only how you're going to be able to tie all the information together. The way the exam is presented to you, you cannot simply just memorize. Some people are good at just reading and memorizing what's on that page, but can you tie the whole concept together? Can you build your own process map? If I just throw terms at you, can you take those terms and put it, okay, this is Congress. Then once Congress does this and the president gives them the budget, and then Congress does this with the budget, phase 1, phase 2, phase 3, then it goes back here. Can you recreate that? That is when you know you are ready for the exam. Do not compartmentalize the information in just bits and pieces. Try to build the big picture. All right, well, that's all I have for today, so I can stand by for any particular question. Hopefully this was beneficial to you. If you have not already subscribed to our YouTube page, please do so. All it does is it allows YouTube to recognize that, oh, a lot of people is going to this page, so let's publicize it some more. So it brings visibility to the page so that as people are going into Google and they type in CDFM or CDFM study material, then our YouTube videos will pop up for them. So just please click on that subscribe button for us. All right, that's all I have for today. Next week, we're going to go over the auditing And let me see how that's broken down. Auditing also is about equal to the accounting. So we got to make sure we focus on the auditing section also next week. All right, this is Helen Thomas on the CDFM study group. Thank you guys for stopping by, and I'll see you guys again next time.